All right, guys, you're welcome to our session for today. So our goal today on this session is basically to, we call this the gold run. We call this the gold run, learn how to strike it rich in gold trading, right? So gold is one of the most volatile assets to trade in the financial markets. Very volatile, and volatility means that there's a huge swing of movement happening on a daily basis in gold. And then when you find any volatile asset like that, you can make very good profits from trading gold. And then, of course, if you've if you have personally not traded gold, you followed any trader of gold, you know that gold is one of those assets that can make you a load of money, right? A load of money. So what we want to do here today is basically to look into gold and basically help us understand a few things about gold and help us to begin to see how to take advantage of the moves that happen in gold and make profit from it. Also, we'll look at any potential trades that we can see on gold right now or a potential trade we will see on gold very soon. If we see a trade right now, of course, I'll give us the parameters to get on the gold trade right on this call, right? So what's been happening with gold, right? What's been happening with gold? Gold has been on a serious rally, been buying for making very huge moves recently, So, and the thing with gold, one thing with gold is this: gold is what we call a safe haven asset, right? Gold is what we call a safe haven, a safe haven asset or safe haven instrument. Okay, so gold is a safe haven instrument. So what you will notice is that gold does very well during times where there's problem in the world, when there is COVID-19, something like COVID is happening, right? So, during times where Russia attacks Ukraine and there are bombs flying over and all of those things, gold is that asset that does very well during those times, right? So now there's a difference between risk assets and safe haven assets. Now, risk assets are assets that basically have some connection to, some connection to products, services, and all of that, like instruments like stocks. Stocks are risk assets, right? So whenever something happens, let's take, for example, you have a company that operates in a particular jurisdiction, and then something happens to their factory. They've been doing well, their stocks have been doing well, and something happens to their factory, an earthquake happens, and the whole factory is destroyed. What will happen? What will happen to the stock price? And if you're an investor in that stock, it depreciates, right? That's why they are called risk assets. So whenever there's a problem in the world, like all the things I just mentioned, like COVID-19, a war, a crisis, and all that, the perception investors have is that gold is an indestructible asset, and then it tends to retain value. It's indestructible and it tends to retain value, right? So because of that, investors think, say, if I put gold in fire, if you put gold in fire, it's not going to get burnt, it's not going to be destroyed. Even the Bible tells us that, one of the ways to test gold talks about passing gold through the fire. So gold is one of those assets that you pass through fire and it will not be destroyed. So that's the perception investors have, and they think, okay, this is something I can save my money in. So you see this move here, this massive buy move you see right here now, this one. This is on a monthly chart, right? And the reason why we want to look at gold from a monthly chart from that perspective is to help us understand the movements. Where is price going right now? What is it doing right now? Why is it going the way it's going right now? And how can we catch some substantial moves going forward? That's what this is about, right? So this move you are seeing here on gold right now, this is a 3,000 pips. If you know how to calculate pips, 3,000 pips means that if you only have 0.1 lot size, that will be $3,000. Just 0.1 lot size. That's $3,000, right? That's the kind of moves that can happen in gold, right? Okay, so now, yeah. Now let's look at what's been going on. Now let's go to a lower time frame here. Now, on a lower time frame, this is the weekly chart. Why am I looking at it from a longer time frame? I know some people are going to ask me, oh, do you look at it from longer time frames like that? Now, which is better? Should I look at it from a lower time frame or from a higher time frame? Now, it's not about what is better. The reason why I'm looking at the market from a higher time frame right now is because I want to be able to catch, I don't want 30 pips. I don't want 20 pips. I want to be able to see how can I get 100 pips? How can I get 200 pips? Because the truth is this, there's in trading, you are told to cut losses short and let profits ride. Cut losses short and let profits ride. Now, if you are able to take very substantial moves in the market, you will make a lot of money very quickly, right? So that's the reason why when you look at a volatile asset like gold, like this, then you want to be able to say, how can I take 100 pips? How can I take 200 pips and make good profit from this, right? Rather than 10 pips, 20 pips here and there, right? Okay, so that's why we're going to do, that's why we are taking it from a longer time frame. All right. So here are two areas that gold is going to come to. These are two areas that gold is going to come to. This area here, and then this area here. This is what we call, these are huge support zones. These are huge support zones, right? Huge, substantial support zones. That's what we have there. Real huge support zones right here, right there, right? This is on the weekly chart. Now we go lower again. We'll go to the daily chart. Then we go to the 4-hour chart. And then so what we are looking for now is we are looking for an entry. We are looking to make profit. Now, before we go on here, let's look at what direction the market is going. Now, when you look at this from the lower, look at it from a higher time frame, gold went to an all-time high of about 2,150. This was some weeks ago. And right now, what gold is doing is gold is trying to sell back to this zone or this zone. Now, when gold comes to this area, gold is going to likely buy from here all the way to this top. So now, look at it. Gold is likely going to buy from here all the way to this top. That is some 950 pips. 950 pips. That's the potential of this move that I just showed now. Now, if gold comes to this bottom here, that is a potential, that's a potential 1,300 pips. Okay. Okay. So now, how do you do this? These larger time frames are not necessarily for you to enter your trades. They are just basically for you to show you what direction the market is going. That is going to be substantial. What direction is the market going? Now we can see that gold wants to sell from this current area where it is down to this point. That's the sell we're anticipating on gold. So don't be surprised when you start seeing gold selling and you are seeing 100 pips, 200 pips selling downwards. Don't be surprised, because this is where gold is coming to. Gold is trying to come to this place. This is where gold is trying to come to right now, right? So, and it has to come from all this top of this way up down to this place. That's where it's going. Okay. So now we know that we are looking for a sell on gold. We are looking for a sell on gold. Okay. So now what is going to be our entry points? Where would we enter the market? Where are we going to enter the market on gold? So now we need to go to a lower time frame. Let's go to a lower time frame. Lower time frame will give us an idea of where we should be entering on gold. Okay. So looking at this now, right here would have been the entry on this gold. So when we did an analysis on gold, I think during the weekends, I told us that price was going to sell. Gold was setting up for a sell, but the entry was still a bit, it was still a bit of a concern. We were still concerned a bit about the entry, because we were like, okay, let's hold on a bit and make sure that we see certain things. And what is it that we're trying to see? What we're trying to see was the direction of the dollar index. the direction of the dollar index, because gold has this relationship. Gold has this relationship with the dollar index that is inverse, that is an opposite relationship. So you can see these two bars I drew here right now. This is a resistance at the top here. This is a support at the bottom here, right? So price had been stuck within this range for a while. This is the dollar index, right? So the dollar index is an index that measures and tracks only the strength of the dollar, just the strength of the USD itself. That's what this particular instrument does, right? It tracks the strength of the dollar. Is it weak? Is it selling? Is it buying at every point? That's what this dollar index is doing. Okay, so it's been stuck within this range for probably the past 1 week, more than a week now. More than a week, it's been stuck about just more than a week in stock here. But we already seen the analysis, we done the analysis, and we could see that the dollar index was going to break out, and then the direction of the dollar index is coming to this area here. This is where the dollar index is going to get to before it starts to sell again. This is where the dollar index is going to get to before it starts to sell again. At least it should sell back to this area, somewhere around here. That's the trajectory. That's the plan we have. Now, but then the thing is, like we said, the dollar index and gold has this inverse relationship. But as long as dollar index was stuck inside this range, we couldn't just jump on gold like that. We couldn't just jump on gold, right? So that's the reason why we had to wait for this breakout on the dollar index. And this breakout happened just last night. Last night into this morning, this breakout happened. Now, this is the reason why you are seeing strong sell moves on gold. This is the reason why gold is selling right now like crazy. Can you see? The sell on gold right now, just from today alone, is being how much? 180 pips just this morning, just today alone, right? So, but why? The reason is because the dollar index eventually broke out. It broke out of this range that has held this stock for a while, right? Now, it's going to keep going and it's coming to this top right here. And when that happens, it's going to, as long as that's happening, we know that gold is going to keep selling. As long as that is happening, we know that gold is going to keep selling. But then something is going to happen. Now that we see that gold is selling and then dollar index is buying, therefore gold is selling, where is our trade going to be? Where is our entry? Where is our trade going to be? Okay. Now, for us to enter trade, we already know the direction of the market, the direction is a sell. And we know that right now, for any trade we are going to enter now, the first TP we are going to be targeting is going to be around here. The first take profit we'll be targeting will be around here. We know that no matter what, price is coming here. But we also know that from the analysis on the larger time frame we did, that price is likely to come here on gold. Price on gold is going to come here. So, but of course, we can already see that this is the first take profit we are going to be targeting. When we target this take profit, once we hit this take profit, then we can get out of the market and wait for price to break out of this again. That's how we're going to trade it. So even though we expect price to come all the way to this bottom here, we expect price to do this, we are not going to trade it directly. We won't just place one trade and expect the one trade to come straight here. No, that's not what we're going to do. What we're going to do is that we are going to take a trade. We're going to find a trade that will take us first of all to this area. This is where we are going to, this is our target first. Once price gets here, we will take our profit. We will close our trade and take profit. Then we will wait for price to break out of this area. We'll wait for price to break out of here, pull back here. We'll wait for price to break out, pull back to this area here, and then sell again all this way here. So now this breakout is going to be our signal that price has started coming down again. This is the breakout that we're going to wait for. So at this moment, we are going to look for a trade only that will take us to this area, right? Fine. So how are we going to get into that trade? So let's look for our possible entry on gold. Let's look for our possible entry on gold. Right? So for us to get into gold, there is this tool called Fibonacci. Fibonacci is a very effective tool to tell you where your trade is likely to go to. what is the pullback? Because what the market works by impulse pullback, impulse pullback, impulse pullback continuation, impulse pullback continuation, impulse pullback continuation, impulse retracement continuation. That's the way the market works, right? Now, this move we are seeing here is what we call impulse. Impulse because you see a certain number of candles all moving in the same direction. That's impulse. Impulse. So now we need a pullback for us to get on this trade. If you enter here, we know that price is going to sell, right? Fine. Now, what are you going to do? Are we going to jump in here and trade? That is very bad practice. If you enter on a trade here and place a sell, that means you're trying to lose your money, right? So you don't want to do that. You are going to wait for price to make a pullback. We'll wait for price to make a pullback. That's the way we're going to do. We'll wait for price to make a pullback. Now, based on the way Fibonacci works, it works with support and resistance. This is the zone here where we expect price to pull back to. This is the zone where we expect price to pull back to. So we expect this to happen. Price is going to pull back here from where it is now. And then this is where we are going to be targeting to catch our trade. So what's the target on this trade now? Based on this entry, we are going to be targeting some 200 and literally 300 pips. Can you see that? 300 pips. So we can get 300 pips. Now, if you are going to get 300 pips, you have the potential to get 300 pips on a trade. What's the point of rushing? There's no point rushing, right? So you want to make sure that you get your entries right. Get your entries right. So based on what we have seen here right now, what we are going to do now is this, right? We're going to get our trading parameters for this particular trade. Okay, so we're expecting a sell. So let's get on this sell here, and then we will put our stop loss somewhere here. So our stop loss is going to be somewhere here. Ideally, our stop loss should even be high. It should be like, 60 pips or something, 66 pips. But we can still reduce the stop loss. We can still reduce it and put it somewhere here for 40 pips. So we can make our stop loss 40 pips. This is good. I know that some people don't like trading. They think 40 pips is too much. But if 40 pips, well, you are looking to take 300 pips. That's a lot, right? That's a lot. So with that, you can see this is risk to reward ratio of 1 to 7. Risk to reward ratio of 1 to 7. Risk to reward ratio of 1 to 7. So that is excellent risk to reward ratio. This is not the kind of risk to reward ratio you get every time, right? So what that means is that if you are risking $50 on this trade now, your target is $350 by the time this trade hits take profit. If you are risking $100 on this trade, your target is $700 on this trade, right? So this is how you trade gold. This is how you trade gold. Now, of course, you may decide not to let your trade come to hit this take profit here. It's up to you though, right? You might be in profit to the tune of 100 pips and you take profit, up to 150 pips and you take profit. That's up to you. But we are just talking about the potential of the trade, right? So this is the trade we see on gold right now, and this is the analysis on gold. Now, every time we come to this class and do this session, we show you new things about what's happening with gold and where the next trade is. But for today, the trade we have on gold is this one we are setting up right now. So here is the trade on gold. The trade on gold is going to be a sell limit. It's going to be a sell limit. Sell limit. XAU USD sell limit. Sell limit. So we're going to have our entry price. Entry price. Stop loss. Take profit. Take profit, right? Okay. So now, what's our entry price there? So our entry price is, let's see, These are entry price. Our entry price is 2045, 2045.778, 2045.78. Okay, so just hold on, I'll make it clearer. Take profit. Okay. Stop loss. Okay, stop loss right there. Okay. So these are the parameters for the trade we have right now on gold. So we have a trade, we have a sell limit on gold, sell limit. We have entry price. Entry price is at 2045.78. That's our entry price. Our stop loss is 2049.80. Our take profit is 2017.29. So our risk to reward ratio here is 1 to 7. RRR is 1 to 7. 1 to 7. So that is excellent risk to reward ratio. That's our target for this trade, right? So guys, take these parameters, just set it as pending order and leave it alone. That's all you need to do. This might happen before the end of today, or it may happen by tomorrow morning. It doesn't matter, right? So all you just need to do is set the pending order, relax, let the trade trigger and play out. Okay, so at any point, this is a 300 pip target. Is that 300 pips or more? Okay, this is 284 pips movement right there. So at any point you are comfortable, you decide you want to take profit, you take profit. All right, but this is the trade for gold right now. This is a trade we need to milk this sell. As price comes down, we need to milk this sell, and the milking is right where we are talking about right now. That's where the entry is. All right, so thank you guys. I'll see you on the next gold call or on the next indices call. Okay.
Thank you.